Cool. All right, let's get started. So I've thought about it a little bit, but I haven't given it all the thought in the world. So I'll definitely kind of be walking through my thought process with you guys and just looking at all the things I tend to look at when I'm doing these technical analysis. So to start, I mean, the best place to start is on the longer time frames. I like to use the 4 hour. Um, I equate the 4 hour candle to essentially the daily candle from stocks. And so all of our technical analysis techniques that we use for cryptocurrencies are actually from the stock market, right? And if you think about it, the cryptocurrency market moves almost exactly um, 4 times as fast. So if you the stock market runs 8 hours a day for 5 days a week, which is equivalent of 40 hours every week. And since crypto is 24/7, there's 168 hours every week, and so 168 divided by 40 is roughly equal to 4. People like to use daily candles, and that's fine. Maybe you could equate that to a weekly candle in the stock chart in the stock world. But as far as what do you call it? As far as daily candles, I think 4 hours are the equivalent. So that's why I like using that. Anyway, so to start, normally it's just best to draw the trend lines that we've found. So we have this super resistance right here that's played a pretty big role. And then, down here, we have, I don't know, we have some kind of thing probably we have some kind of thing up in here, some kind of channel. Maybe it's more like this, because I like to have my channels. I like it when the channels are parallel, because I feel like oftentimes that's just the way things work out, is that things are parallel. So if you can find some way, maybe it violates it a couple times, but I like that. I like this as like a rough idea of what our channel might be looking like. So yeah, so we have this, and so we tested this resistance and we got rejected. The reason, if you weren't here the other day, I called this 10,300 pretty much as the bottom for this dip. And the reason I did that was because there was a huge confluence of, how did I draw it? Somehow, yeah, so something like this. There's a pretty big confluence of, maybe it was not that one. Maybe it was just this wave, or I don't know. There was something I drew, and somehow I made it so this fib level fell around here, right at this confluence of the 200 EMA and the 55 EMA, and we actually did see a pretty significant bounce right here. Rejected it, but then it came back down and broke it. So as far as that goes, we have to figure out, where do we think it's going to go next? And actually, I'm going to leave this up here. So my favorite things to look at are, let's just check the Ichimoku clouds and see. So we're like coming into the support area here as well, so it's something to keep in mind. But let's go in and look at a 30-minute chart now. Now a lot of that stuff went away, so maybe we could go out to the hour. Well, okay, yeah. So let's just look at this and see what we have going on. So over here in this uptrend, after we bounced off of 6K, there was a pretty clear set of Elliott waves. We have this 1, 2, 3, 4, and 5. And now each one of these can be separated fairly clearly out into its individual Elliott waves. This has a really interesting structure with a leading diagonal. This could be drawn any number of ways, but I forgot exactly how it worked. But there's a leading diagonal here, and so so that, and this ends up being valid as the third wave. And then in here, we see a 1, 2, 3, 4, 5 pretty clearly. I'll make these smaller so it's more clear to see everything. You guys might grow. And then here on this last fifth wave, it wasn't as big as we hoped, but because we bounced off of that, but it's still clear to see a 1, 2, 3, 4, 5. So from there, where do we go? What do we see? I'm actually going to lock these fibs. Well, now we have some kind of correction, right? It's only natural, and so there's two ways that I see it playing out. So first of all, I'm going to draw this trend, and this is another one of those parallel channels that I like to draw. So we have something like this going on, and I'll make it a slightly different color because that's just the way we roll. So here we are, and if we wanted to draw our corrective waves, whoops. If we wanted to draw our corrective waves, we would draw some kind of A. Here's the one I like the most: A, B, and then C, right? C down here, we're tracing to this 0.618 level around 9600. And that's actually where we are right now. So what we're trying to figure out is this going to hold, or are we going to break down further? Now to go into this more, if we count these subwaves, we can actually see that this is a 3-3-5 corrective pattern, which is a flat. And so here is our first three. There's an A, B, C. And we'll make that. Oops. Did I already line it? I'm going to go micro line. All right. So we have that A, B, C, which means that this should be millennium. No, let's do whatever. We'll just stick with that. So here's the flat pattern for a corrective wave, it's always going to be a 3-3-5. And if you guys saw the thing I made, let me pull it up actually real quick. Documents. No. Where was it? It's probably on my desktop. Elliott Waves. Here we go. So I made this. And so what we have here is a flat expanding, or actually it's a flat. The 3-3-5 corrective flat. The term flat is a catch-all for any 3-3-5 corrective wave. So in the ABC grand scheme of things, you have the first wave is an ABC, a 3. The second wave, corrective, the A to B, is also 3. And then the final, B to C, has 5 waves in it. And so here we see the A, B, C, the first 3. And then in here, it's not pretty, but it's still here. We see this A, B, C, perfectly valid. And then here we're looking for 5 waves, right? So here we could see 1, 2, 3, 4, and then here's where I think the 5 ends. Now, for this to be valid, if this is going to hold true, we have to make sure that the third wave is not the shortest. And we can tell for sure that this first wave is definitely longer than the second motive wave, right? So we have to make sure that this third motive wave is not longer than that, right? So if we do a price range from here to here, right, this fifth wave cannot be any longer than that, right? So if we drag it over to here, we see that it's fucking ridiculous how, wow, look at how that lines up perfectly with this 0.618 fib level of the entire pattern, right here. So that's why I'm convinced. Now, obviously, I could be wrong, but that's why I think that this is pretty much our bottom. And so we could have actually already hit it. We have a wick. We have a wick coming down pretty close, so it could be over, and that could be it. But it's entirely possible that I am wrong, because market makers like to fuck you like that. So if I am not right, and that's not how this plays out, there's another option that the Elliott waves could be telling us, and that is that this is an ABC, right? ABC, like expected. But then what we have is we have a failed impulse wave, which is this double combo. So we have this WX, and then we'll have a Y somewhere down here. And inside of this Y, you have another ABC pattern. So inside of this Y, from the X to the Y, you have an A, B, and a C. So quite frankly, even if this is a failed impulse wave, it's actually not that much different than it just retracing to this 0.618 fib level, which is, makes me more convinced that this is going to be our bottom, because even if I do it this way, and we're assuming also that this trend support, this parallel channel holds true, but making all those assumptions, this 0.618 looks very good. So yeah, that's my opinion. My opinion is that this is definitely the bottom. Originally, I thought that this was going to be our bottom, but this definitely looks more likely. And as a bottom goes, it doesn't necessarily mean that I think, okay, well, now that that's done, we're just going to go up and see 15K anymore. I by no means am making that assumption. Whoops. But I am just saying that after this point, I think that we'll see another try. And I think that try means that we're going to come up here and test this resistance again. And if we can test that resistance, that's a very good thing. And to add to that, if we look at our stocks and our RSI, we see that we are pretty oversold right now on both the stocks and RSI, which is a very bullish sign that a reversal or some kind of bounce is coming. But it could go any way, and so maybe you see people. One thing that kind of annoys me a bunch is people will be saying that maybe it's just a standard 535 Elliott Wave zigzag, and this is our A, and then we'll see a B, and then we'll see a C even further down here because oh look, it's 1, 2, 3, 4, 5, right? Like pretty crazy, huh? And so actually, maybe that was our 5, and then we just had some like super minuscule bounce here, and now we're just gonna keep on going down. But I just don't see that for several reasons. First of all, the third wave in this case is the shortest. No two ways to put it. If we measure this first wave right here from there to the top, right? So that's $1,100, and then so this is 1,100, right? And then this third wave here from here to here is $987, and then this fifth wave, theoretical fifth wave, this is $1,170. So that means that this third wave is the shortest, which automatically makes it completely invalid. No two ways to go about it. And also, in addition to that, the first and the fourth wave here have some pretty significant overlap. Now, normally I'm okay if there's a little bit of overlap, and that little bit being only in the wicks. Because if it's only in the wicks, we're in a leveraged market, and someone randomly accidentally market buying some huge amount, or someone accidentally getting stopped out of position. Things can happen, especially in these leveraged markets where people are, working with more money than they actually have. There can be a little overlap, and in the wicks, that's fine. But this much overlap is too much for me to be comfortable saying that this is a valid Elliott Wave count, even if this third wave wasn't the shortest. So this is not, that's not possible. That's just how it is. Now the other thing that we could see, there's one more possibility, is that double zigzags or double flats do happen. So we could have this A, B, C right here, right? And then we have our W, X, Y, but it doesn't stop there. And we could see another failure wave, and then another retracement down. And so this double, what does it call it here? It calls it a Elliott triple combo wave, right? It's pretty rare, but it's not to say that it doesn't happen. So we might see this A, B, C down to here, right? And then we'll see a bounce. And then, so we'll see something come up to here. And then we'll try the top of this. And then we'll see another, A, B, C or something like that. And so in that case, we might end up seeing, you might have seen people call this 8,900 target, and that coincides with the 50% retracement right here. So those are all the possibilities that I see. I really like this 0.618 the most, though, because it also, it kind of lies nice and cleanly with, this and this support. So yeah, that's pretty much how I see it. I'm going to go through these comments here and see if I can answer any of the questions. So yeah, actually everyone in here should be a dojo member. I didn't post the live stream link anywhere else, so unless you subscribe to me on YouTube, you wouldn't know about this. So yeah, bottom. I don't know if it's a bottom, man. Like, there's some other people out there who are, better than I am at technical analysis, who are saying that we're gonna be seeing a bounce again off of this 6K. I think Chris posted some analysis in the dojo about that. And I mean, it's entirely possible that happens. But I remain bullish on Bitcoin for the time being, just because, I mean, just the way that this third wave played out, especially, it was just so ridiculously bullish. Like, I thought that every single one of these retracements was going to retrace more, but it just didn't happen. And it was just constantly bowling through all of these resistances, and I mean, it was crazy. So I'm convinced that this 0.618 is where we're gonna hold it. But don't hold my life onto that, because I could be wrong. And that's just the way TA works. And now, if I were to execute trades off of this, what would I be doing? Well, I would come here and I would put, an entry somewhere in this area, and then I would exit my trade. Here we can pull up these. So I'd enter somewhere in here, and I'd exit my trade probably as soon as it hit this top resistance, and my stop loss would be probably around here. So you have a pretty solid risk-reward ratio, and if you're interested in leverage trading that, this is how I would play it. And then if we broke out past this trend resistance, if I saw a significant breakout of this with volume, then I would enter another trade wherever it broke out a little bit above that, and I would look to close it on this long-term trend resistance, and you know, I'd have my stop loss a little bit back below here, inside of this channel. So yeah, let's see. The tool for that loss gain, it's in here. You have all these, the price range, long position, short position. You could make these like ghost candle feeds of like, look, it's gonna do all of this random shit. But yeah, it's whatever. It's a handy tool for measuring your positions out. Let's see, any other questions? The difference between the RSI and stock RSI. You know what? If I'm gonna be completely honest with you, I really couldn't tell you the difference. I know pretty much what they measure, which is, you know, how overbought or oversold the stock is. But I couldn't tell you exactly how they're calculated, which I should know. I feel like I should know that. Yeah, I'll probably look that up. You know. RSI, right? It's 100 minus 100 minus 100 over 1 plus the RS, where the RS is the average gain of up periods. So, I mean, yeah, it's a pretty simple formula. I'm sure the stocks are a little bit different. I personally like the RSI a little bit better than the stocks, because I think it's more accurate. The stocks tend to swing more randomly, and I find that you can draw patterns more. And actually, let's see let's do a little RSI analysis here, because this is totally valid. We can see that we have kind of bottom support right here. And let's see what else. Maybe we have a downtrend here, something like that. So if we see a breakout of this, that would definitely be a bullish sign. And then as far as making highs and lows go relative to this, let's get rid of the stocks here. So inside of this, we have a low, and then we have a lower low, and then we have an even lower low, but the RSI is not making lower lows. And so just the fact that this is happening, this is actually a bullish divergence. The fact that, you know, this is bottoming out here, that the price keeps going down, that indicates that, you know, a reversal is incoming. So, you know, that's another strong sign that, you know, this 618 fib is going to hold. But, you know, this is something that we'll find out in probably the next few hours, whether or not I'm right. So, I mean, stay tuned, because that will be the answer. All right, does anybody else have any questions? Because if not, I will end the stream there. Questions. I'll give you guys a second to type out or think of stuff. RSI versus stock RSI, I went into that a little bit. I don't honestly know too much of the difference other than how to read them, and interpret them. So, alrighty, well, if that is all, I will end the stream there. If you guys have any more questions, feel free to shoot me a message. I will try and be as open as I can, especially to you guys. So thank you for watching, and I will see you guys later.